Hargreaves Lansdown is the #1 DIY investing platform in the UK. So today we're going to do a walkthrough of the site and review 4 essential parts of the business, which includes things like costs and the services it offers, and then give you the steps to investing overall score at the end. Hi, I'm Marcus De Silva and welcome to the Steps to Investing product and service reviews, where we're going to take a look at the UK's major investing platforms and review essential parts of the business and score them so that we can help you in choosing the best service for your investing needs. Now, my business partner Simon Longfellow and I have over 30 years of investing industry experience between us, with Simon having worked at 2 different investment platforms, as well as various investment managers, and myself at fund management firms as an investment specialist. What this means is that we intricately know the inner workings of the industry and what you need to look at when it comes to choosing investments and investment services. Our reviews are going to focus on 2 types of platform, what we call DIY platform, which are full service and pretty wide ranging in terms of investment products, and also what we call do it with me platforms. These are commonly known as robo-advisors, and basically they're much simpler and easier to understand, but they will be more limited in terms of services and investments. We'll deal with jargon throughout the videos, but if you want to learn more, we've got a free 7-day email course, as well as lots of content on our website. So please just go there and check it out. Of course, you can always leave some comments below the video and we'll get back to you. So today we're going to be looking at the UK's #1 investment platform. It's Hargreaves Lansdown. It's been around since 1981 and it's managed to hoover up 1.5 million Brits over the time, placing it far ahead of its second place rival, Interactive Investor. Its service and product offering is seriously impressive, and we must admit, for those reasons, both me and Simon have accounts with Hargreaves Lansdown. But, as can often be the case with entrenched leaders, to be honest, in any industry, it's far from perfect, and it has one niggling issue. Now today, we're going to have a look at 4 areas of the business to help you out. So the first thing is the types of investment accounts that are available. Secondly, the range of investment products you can buy on it. Then there's the services on top of those things. And finally, of course, the all-important costs to you. We'll then finish with our overall rating for the platform. Now, as I said before, please just leave any comments below if you've got any questions. We'll aim to get back on all of them. Okay, so we're going to start with the types of accounts that you can open with Hargreaves Lansdown. Now basically, when you're starting off with investing, you've got 2 things you need to do. You need to open an account, and then once you've opened that account, you need to find some things to invest in through that account. So of course, the best thing that we need to start with is what kind of accounts do they have available. And so you can see here, this is Hargreaves home page. Lots of stuff for beginner investors there, but we're not going to start with that. We're going to have a little look at these main accounts. And this sort of sums up what we think are the 3 main accounts. And there's variations of each, which we also look at, but I'll just give you the sort of the top line view. So I think the first thing to say is that there are these 2 accounts here. So you've got your stocks and shares ISA and your SIP, your self-invested personal pension. Now these 2 accounts are tax-free accounts, okay? So they're government incentivized, and any activity that goes on within those accounts is not subjected to any taxes. So there are capital gains taxes for when the value of an asset rises and you sell it. There are taxes on dividends, that's the income from shares, and there's taxes on interest from bonds as well. None of that applies when you invest through these 2 accounts. So we think these are the main ways in which you invest, right? You're either saving for your future, which is your pension right here, or you're doing more everyday kind of saving. Maybe goals are a lot closer, and that you do through your ISA. To be honest, this fund and share account, we call it a general investment account. It It has no tax privileges, so anything you do in that will be subject to the taxman's glare. I mean, unless if you fall outside the limits, and I'll get onto that in just a sec, then maybe that's why you might want to use this. But we think most of the activity tends to go on within these two types of accounts. Just as a quick kind of overview, so your pension comes with lots of benefits, lots of extra money basically that the government give you. You can't touch it until you're 55. When you that's when you can start drawing down from your pension, selling investments and taking money from it. That will rise to 57 in 2028. So that's the key thing to remember about your pension. It's great for long-term savings. Once something goes into it though, it can't come out until you're a bit older. We've got a video on SIPs, so please just check that out if you want to know a little bit more. The other thing here is, of course, the ISA. So the thing to remember about ISAs is they differ from pensions in the sense that you can take money out at any time you want, but there is a limit to the contributions that you kind of put into it. So the limit is £20,000 in a tax year. So that means from the 6th of April all the way through to the following 5th of April, you're allowed to put up to £20,000 into that account. And then anything it does, I mean, if that £20,000, I mean, let's say you're a genius investor and that £20,000 grew to £100,000, the taxman still wouldn't care. In fact, you don't even need to tell the taxman about that. So I think that is the key thing to mention about ISAs. There are variations. There's actually a fair different few variations. We've got more details on that. I'm not going to go into it now in this particular video as well, so just check that out. And then the final one here is your general investment account. So if there's any sort of overflow basically, and you want to do some extra investing, then you can do it through this part. Okay, so I think just to summarize on that point, we had a look at all the different types of ISAs here and the different types of SIPs. Yeah, to mention there is also the junior SIP that you can set up for your child, and we thought it had a really good range. It was quite wide in that sense. So we gave it 4.5 out of 5 stars for its account. All right, let's move on to the types of investments that you can make. So again, I mean, so Hargreaves, the way they've done this is they've sort of split it between funds and what they call shares. Now in shares, you're going to see that there are collective, so there are fund type investments in that as well. And in a bit, I'll get on to explain why they've sort of been put into shares. But basically, it's quite useful this because the way in which Hargreaves charge you differs whether you're looking at funds or whether you're looking at anything they kind of group under shares as well. So it kind of splits it between the two major kind of investment types, but also the ways in which they charge you for their funds. So let's start with their funds, and this really is their bread and butter. They have an extraordinarily wide range of funds. If we just click onto that, you can see there 3,798 funds. I mean, it's pretty much the whole market for the UK there, and it can present as a bit of analysis paralysis. How do I decide which of those is kind of my best? So I think this is where it does quite well as well. As you can see here, it's got quite a lot of different filtering options. I'll just quickly show you what how that kind of works. So the first one is sector, and I think this is kind of broadly split between, if you're looking for funds that are going to focus on a certain region, then you can kind of see here we've got Asia Pacific, there we've got China, we've got Europe. So there's always these kind of regional focus when it comes to funds. The other major thing might be the assets as well. So here you can kind of see bonds that companies issue, whereas up here you can see that's the shares of European companies that are a little bit smaller. So it's kind of split between region and also assets as well when you're looking at sectors. I think the other big way when you're sort of filtering out funds that's quite useful is this kind of, are they actively managed or are they passively managed? Now, when we say actively managed, it means there's a fund manager who oversees a portfolio, who selects investments for that portfolio, that comes at a cost. So they're always the more expensive ones, but what they should be doing is trying to select investments so that they can beat the benchmark that they are compared against. Trackers are these passively managed funds. So all they do is just mimic an index. So they're much cheaper. There's no fund manager selecting investments, but there's also no chance of outperformance. So those two things are really kind of like a really useful way of kind of filtering out funds for you know, when you're trying to get through this enormous kind of list. And there's many more filters as well. I mean, I think this is one of the things that Hargreaves is quite impressive at, is that it's kind of got these different ways of looking at funds. Most other investment services don't sort of go into this kind of granular detail, and all of these things can be quite useful actually, depending on what it is that you're looking for. Okay, oh yes, it's probably worth mentioning just this wealth shortlist as well. So what they used to do is they used to sort of get all these, you know, cut down all these funds into a very small group that they felt were really, really good. So they felt like they had great managers, good long-term performance, great strategy, all this kind of stuff. But they kind of got a bit upset by it, because they had kept a fund by a guy called Neil Woodford on their select list for a very, very long time. And he started to do things within one of his funds that he really shouldn't have been. He was basically investing in very risky investments that weren't listed on a public exchange. And the whole point of that fund was that it was to invest in the shares that were on public exchanges. And a lot of professional investors had actually sort of seen this and started to go, oh, you know, this isn't very good. And for some reason, Hargreaves just kept it there on and on and on, and it was a great source of embarrassment when the fund and Neil Woodford's company basically imploded. So they got a lot of bad press for that, and I think they might have sort of you know, slightly toned down the importance of their wealth list for these reasons. But these are kind of useful tools, and I think this is what Hargreaves is quite good at, is, you know, it's useful tools for trying to chop down this enormous environment when you're you know, selecting things. And there's other stuff as well. So there's lots of learnings. We'll sort of have a look at that in a sec. There's lots of research that they do. I mean, Hargreaves is one of the most extensive individual stock research, fund research, all sorts of stuff there. And then they've got this quite interesting ready-made portfolio idea. And it's, if you really don't want to go into choosing your own funds and your own investments, then you can kind of use this tool as a way of doing it. You can choose some simple measures of how much risk you want to take or your kind of goals, and then they'll put you into these kind of fund portfolios. It's good if you want to be really hands-off. What's bad is that they can be expensive because you've got layers of charges there. Now, so that's the kind of funds. There's lots to kind of help you choose between all these different funds. We've also got this shares section. And what's slightly confusing here is it's not just shares of operating companies that you would normally think of. It's not just the Teslas and the BPs and all those kind of shares. It actually also includes other kind of funds, really. There's these investment trusts, as they're known. And the reason why they're here is because they have shares that are traded on a stock exchange just like any other share. So with funds, shares, when you invest in a fund, shares are created or cancelled depending on how much money goes into that fund, right? With investment trusts, shares, you buy shares of other people on an exchange. So it's the same mechanism as normal shares, but they're still portfolios, okay? So that's why you'll find them here. The other thing that's like this are ETFs. So these are passive funds. So we saw that we have passive funds in the fund section as well. These are passive funds that are traded, again, with shares that are traded on an exchange again. So that's why they're slightly different, and it's why they're over in this share section, and also why you'll have different charges relating to these types of products. I think the other thing to mention over here is that you can buy into some bonds as well. So most bonds are not available for retail investors, but there are these kind of retail versions for certain companies. and you're able to buy them here, as well as gilts, so they're UK government bonds as well there. So you can see there's those kind of things, and then there's just your regular sort of share dealing as well. There's plenty of kind of, again, information to kind of help you out. I think just, a couple of things maybe to mention here. IPOs, this is one of the things that the retail funds industry platforms like Hargreaves, like Interactive, they're trying to get people more to have greater access to things like IPOs. So an IPO is when a company for the first time floats its shares on a stock market. And it's traditionally been quite difficult for retail investors to get involved in that. And it's where you can get, quite a lot of value can be created if you buy the shares just as they're coming to the market for the very first time. So here you can kind of then go on to this section and sign up for kind of notifications of IPOs that might be going on, or they've even got some rumored ones here, which I thought was quite interesting. So you can sort of get registered for alerts and make sure that you can be involved in those IPOs as and when they get off. So I think that's quite interesting. Of course, if you've got any questions on any of this stuff, just DM me or leave a comment below. We have given this, in terms of the range of products available, 5 out of 5 stars, because we think it's really broad, and they also put a lot of work into trying to provide you the information that you need. There's a lot of analysis, even on individual stocks as well as funds as well. So we think it really smashes it basically for this part of the service. All right, let's get on to the bit about the services that they offer, and this is all the other stuff that they kind of do around those main things that we were talking about, the investment products and all the stuff that's kind of available there. Broadly, Hargreaves, amazing, loads of research, as I sort of said before, lots of sort of supporting things that they do, given that it's quite a large company. It's a FTSE 100 company, right? So it's a fair few people that work there, and they put obviously quite a bit of time into this. I think a few things to point to on the site here. We got the newsroom. This kind of like gives you, the latest kind of relevant stories that you kind of might want to know from major publishers like Reuters, and Sharecast I think is the one for sort of individual kind of share stuff. There's a good learn section here as well, and I think what we like here is these calculators. It's quite a good way of imagining how your investments can grow and where you can end up in a few decades down the road. We've also got these guides as well, which are useful when you're trying to understand some of the bigger, broader topics as well. So we think that's quite good. I think one more thing to mention as well is the call center. Both Simon and I, have spoken to Hargreaves for our own personal accounts, and I think we've always found that people are pretty knowledgeable, they're well trained. So it's a definite plus point there. The last thing I'm going to point you to just in our services here is the financial advice side of things. We don't think that if you have anything less than really, let's say £100,000, in terms of what you need to do from a financial kind of planning point of view, there's not an awful lot of complexity to it. So you can just get going, you can open a SIP, you can open an ISA, and that will suffice for a lot of the things that you kind of need to do in terms of beating those rubbish returns. But some people want a bit more support than that, and they would like some advice, and this is one of the things that Hargreaves offer. It's they've always done it. They don't make a massive deal about it. And I think there's 2 types of kind of service that you get here. There's the full fat kind of financial planning, which will look holistically at your whole life, think about all sorts of stuff like tax and estate planning and where you want to be and the different types of events that you think you'll go through in life, from marriages to having kids and all that kind of stuff, buying houses and stuff like that. And they provide you with a big broad plan and kind of the things that you might need to do if you want to achieve lots of those goals. So that's very full fat. Or you can have just this kind of investment advice, and that tends to be more narrow. It's like, I've got a particular goal, I just need to choose the best investments that are going to kind of get me there. So they'll give you this kind of tailored advice if that's something that you're kind of after. So yeah, I think that's probably quite a plus point, and it sort of shows you the fullness of the service that you actually get at Hargreaves Lansdown. So I think overall, in terms of the other services it's pretty good. This is why you go to Hargreaves. 4.5 out of 5. Okay, final section is charges. Now, we know these are important to you. I think it's really important that you approach this with some balance, because, you know, on one hand, you don't want to be paying too high charges. High charges really erode those gains that you can make over time. So you want to keep them low, but at the same time you want to make sure that you've got everything you need that supports you in your investing kind of activity. So, you know, we talked about all this information, all the research, things like the advice if you need it. You know, there's lots of supporting things that you might need as well. So that's why you need to kind of balance your view when it comes to charges. The important thing to say is there are generally two sets. What we're having a look at here is the platform fee. Okay, so it's the cost that of you using this Hargreaves service. It's not the cost of the underlying investments. Now, for an individual share, a company like Uppbeat, there isn't any cost associated with that. But for a portfolio, whether it's passively or actively managed, there's going to be an ongoing fee for that kind of investment work. So you need to put the two things together. That's the total amount that this kind of investing will cost you. What we're having a look at here is just the platform fee. So and the problem is as well is that fees on platforms are generally charged in different ways depending on the kind of platform that you're using. For Hargreaves Lansdown, they've got one set of charges for funds. So just to remind you, anything that's kind of in this section here, there's one set of charges, and then anything that's in shares, so anything that's traded on an exchange, which includes those individual shares, but also, let's not forget, investment trusts, ETFs, things like that, they're charged in a different way. So the way in which we analysed this was to have a look at a £20,000 ISA portfolio and see how much it would cost if you just invested in funds and if you just invested in shares. And this, I think, shows you quite nicely why there's a bit of a difference. Let's come down here to the charges. You can go here and you can see the split between the two and why there's a bit of a difference, okay? So if you just invested in funds, then there is a tiered charging structure, tiered ad valorem charging structure. They're going to charge you a percentage of the assets that go into the accounts. And it gets gradually less the more assets you have. But that doesn't mean that suddenly when you have £300,000, right, you've tipped into this bit, that your whole portfolio is going to be charged 0.25. It's tiered. So it means if you had £300,000, the first £250,000 would be charged 0.45. The next £50,000 would be charged 0.25, okay? So it does get gradually cheaper, but you've still always got this kind of base that's kind of at 0.45. Now it differs for shares, anything traded on exchange. We talked about investment trust, shares, ETFs here as well. That is charged at 0.45, but it's capped at £45 a year. So that means basically that would be in the equivalent over here, that would be a £10,000 portfolio. You know, if you had it just in funds, it would cost you £45. If you had £10,000 in just funds, if you had £10,000 in shares, it would cost you £45 as well. But it doesn't go any higher. So if you had £100,000 and you're investing in anything that's deemed shares, so investment trust, things like that, it would still only cost you £45. Where if you had £100,000 in funds, it would cost you £450. So that's where this can be cheaper, but hold on, this is where it gets a bit more complex. Generally, when you trade anything to do with shares, so on an exchange, you'll then get hit with a dealing fee, okay? Whereas you don't generally for funds. Okay, so that's why there's this really weird kind of difference between the charges and why they sort of calculate them in different ways in terms of what you might pay for your total platform fee. These are the dealing fees I was referring to. So in a single month, if you do up to 9 trades, it'll be nearly £12 a trade. Now that is quite expensive, we've got to say. This is where Hargreaves is pretty pricey, I think. It does gradually go down over time. I mean, if you're doing more than 20 trades in a month, then you're pretty much a professional, I think. So it's unlikely you will. So again, you know, this is what we would say, it's massively dependent on the turnover of your portfolio as to kind of how much you would charge, or what the overall cost to you will be. But don't forget, as I said, this is just the platform fee. You then have to look at, when you buy a fund and buy an investment trust, whatever it is, have a look at what those underlying investment fees are as well, because the platform fee and the investment fee is the total that you're going to charge. So all in all, because of these seemingly quite high charges, we have scored this 2 out of 5. Okay, to sum it up, it is the dominant market leader for a reason. It is a quality service and it's got almost every available investment option out there. It is how it's managed to achieve enormous growth in new accounts, especially over lockdown. We saw 70% in new accounts there. It's also managed to shrug off this negative press that it received around the Neil Woodford debacle. Overall, we'd say amazing choice, great help and service, but of course you've got to pay for this, so it's not the cheapest. We give it 4 out of 5 stars.